All right, well, welcome to today's City Club of Boise forum. We are pleased to have you join us virtually today, as we've all changed the way we interact anymore. I've hosted many of these events over the years and always look forward to seeing everybody out in the audience. And not being able to see that is a little disheartening right now, but hopefully you're there and listening and get something great out of this. And one of these days we'll be able to get back in person as well. But this does give us an opportunity to bring in people from all over and even presenters from all over. So appreciate this virtual format that we've been able to utilize and everybody that's put the work into making this happen. So today's conversation, our virtual conversation today, is a very pertinent topic and something that's on my mind a lot. And is retirement only a dream for many in Idaho's workforce? I'm Jeremy Parkinson. I'm past City Club president, current board member, and today's moderator for the program. Attendees, please note that the video audio will not be available from your computers. We'll only be seeing and hearing from our panelists. I'd like to welcome our radio listeners who will be joining us at a later date via Boise State Public Radio on KBSX 91.5 and its affiliates throughout southern Idaho and northern Nevada. Today's forum is available for our audience in large part because of our City Club partners and sponsors. I would like to take time to thank a few of these organizations that help us achieve our mission to ensure compelling conversations, engaged citizens, and a dynamic community. I think that's more important now than ever. So our premier sponsor is Northwest Nazarene University and the NNU College of Business. Our annual sponsor is St. Luke's Health System. We also receive support from our forum series sponsors, Aarp Idaho, Bank of Idaho, Climate Tech Corporation, Echelon Group, Micron, Pacific Source Health Plans, and Small Mine Development. City Club of Boise receives grant funding from the Idaho Humanities Council. We'd also like to thank our media partners, which include Boise State Public Radio, 670 KBOI, Idaho Statesman, and Idaho Public Television, and our university partners, University of Idaho, Boise State University, and NNU. Sincere thanks to those who support City Club of Boise, whether it's through sponsorship, membership, or donations. Especially in this time when we're not able to get together in person, and our world has changed so quickly around us. We really appreciate all that support. Normally at this time, I would ask for a round of applause for all our sponsors. So everybody just thank our sponsors, please. So following our panelists' opening remarks, there will be an opportunity for them to respond to any audience questions. You can use the Q&A function of Zoom. Just type your question in, or you can email those to morgan@cityclubofboise.org. I think that will be flashed on your screen as well, but it's morgan@cityclubofboise.org. And then, those questions will be accumulated. Morgan will make sure to get them to me so that we can ask them of our panelists. And I'll do my best to get to each question, and we'll try to group together ones that may be similar in the interest of time. All right, so let's get into our discussion for today. This is a very important topic, also one that probably gets put off a lot. We see in the headlines, many Americans are unprepared for retirement, and that was before the coronavirus pandemic. There's a retirement crisis in America. Half of Americans over 55 may retire poor. The system is flawed when most Americans have little or no retirement savings. We see all these headlines out there, yet many Americans still put it off. It's something we'll do later. Maybe they don't have the extra money to put away right now, or they don't have the discipline to save, or perhaps they've experienced a job loss. Whatever the reason, this is a reality for many Americans and many Idahoans. Today we have a great panel to discuss this topic in more detail, and I'm going to go ahead and introduce them right now. So Angela Antonelli is a research professor and the executive director of the Center for Retirement Initiatives at Georgetown University's McCourt School of Public Policy. Welcome, Angela.
Thank you.
Pam Eaton is the president and CEO of the Idaho Retailers Association. Welcome, Pam. And Lupe Whistle is state director for AARP Idaho. Go ahead and welcome Lupe as well. I think she's getting unmuted there and getting her camera up. So today's topic is pretty complex. I'd like each of you to take a few minutes to introduce yourselves more, provide some context for today's discussion, and give a little introduction. So Lupe, we're going to start with you. You want to go ahead and get started there, Lupe?
Jeremy, thank you so much. And I really want to thank the Boise City Club for holding this very, very important discussion on retirement savings. As you just mentioned, it is something that we don't talk about enough, or we talk about it but haven't done anything about it. So thank you very much, and thank you, the Boise City Club. A little bit about AARP. We are the largest membership organization representing people 50 and older, with a membership of over 36 million members nationwide and close to 186,000 members here in the state. Our focus has been over three overarching issues, which is health, wealth, and self. You know, health, of course, very important for as we get older, the more important health care is, right? So the accessibility and affordability, extremely important. But today we're going to focus on financial security, which is the wealth piece. That's been a top priority for AARP for reasons you already mentioned. You know, over the years, we have become more and more concerned that people are retiring without enough money to live. You know, by that, I am not talking about money to travel or money to go and play your round of golf or take up that special hobby that you always talked about doing, or, you know, those things that we talk about when we are close to retirement and we say, you know, when I retire, I'm going to fill in the blank. You know, I am talking about just having enough money to merely survive. And this is why AARP is really interested in a retirement savings program that makes it easier for workers to actually start saving for retirement to help them take control of their own lives. And I think this year, and I think you will all agree that the pandemic has made that even more clear. And the pandemic has shown how vital it is for Americans to have savings they can depend on. We must make it easier for workers to be able to save, and so that they can take control of their own future. I mean, when you look at the fact that nearly half of American workers, and that's about 55 million, have no access to a retirement savings plan through their employers. Also, when you look at the fact that the average household only has $2,500 in saved for retirement, and the average household that is near retirement only has $14,500 in savings. We also know that there's been some research that Americans are 15 times, and I repeat, 15 times more likely to save for retirement when they can do so at work through a payroll deduction. And then they are 20 times more likely to save in their workplace if it's automatic. So what can we do? I mean, how can we help Idahoans be in more control of their own lives? And it's through a retirement savings program. It provides an easy pathway for Idaho workers to start building a safety net that and grow their savings as they need it. You know, a retirement savings program available in the workplace gives people that have never saved before a way to grow their retirement savings that they need to prepare for their future. The savings is their own money, okay? So they can take that money from job to job. And here in Idaho, we know that that's important because as you go to work for an employer, you need to be able to take it wherever you go. So their own money to secure their own future. You know, I mean, and a program could be something that would be similar to a 529 college savings plan. It's got to be easy, stress-free way to grow savings out of your own regular paychecks. It also needs to be voluntary. I mean, for employees and employers, it's up to each worker as to whether they want to participate, for one, and number two, how much they want to put away or how much they can put away. A retirement savings program also needs to be really easy for employers to use, especially, I mean, we're talking about small businesses here. It's got to be easy for them to use and with no cost to the employer or to the state. We know here in Idaho, what makes Idaho great is our small businesses. and businesses are working hard just to keep their doors open, but if just being able to provide an easy way for them to offer this to their employers would be just a really good plan, not only for the employer, but for the employee. This could be a public-private partnership between the state and a professional financial institution. So now you're wondering, well, so where does Social Security fit in all of this? I mean, Social Security, it was never meant to be the retirement program for Americans. It was not intended to be that. It was supposed to be, something to augment your retirement. It is a very critical piece of the puzzle, but it's not enough to depend on. Many future retirees will not be able to handle the rising cost of basic needs and growing healthcare costs. Half of all households are at risk right now of not being able to handle everyday expenses like medicine, utilities, and rent in their retirement. Now, the average, and I'm talking average, Social Security benefit for a 60-plus family is only about $18,000 a year. While American families spend an average of about $20,000 a year on food, utilities, healthcare alone takes a lot of that money. So in Idaho, it's probably less than that. So again, I think the COVID pandemic has brought it back home, and it has really increased the urgency to get something done. The lack of retirement savings has been an issue for many, many years, but this year, finding a solution and to empower Idahoans to direct their own future is more important than ever before. So again, I really want to thank the Boise City Club for this opportunity and for bringing this issue to the forefront. So Jeremy, I'm going to toss it back to you.
Thanks, Lupe. We'll turn over to Pam now. Pam, you work with obviously a lot of local businesses in Idaho, and so what are you hearing from them about their needs for retirement, and introduce yourself a little bit more.
Okay, so I'm Pam Eaton. I'm President CEO of both the Idaho Retailers Association and the Idaho Lodging and Restaurant Association. And I've basically been working in these industries for over 25 years. So, and it's fun. They're fun industries. So these associations represent both small and large and every type possible under that umbrella all across Idaho. So it's a very diverse population, but it's a large population. So we represent over a quarter of Idaho's workforce, well over a quarter of Idaho's workforce. And the majority of those employers do not have retirement accounts or plans. And the majority of those employees do not have retirement accounts, and they keep thinking, oh, there'll be time later, there'll be time later, there'll be time later. So we face this on a very regular basis. And that's why I think this is a great opportunity on multiple levels to start making a real change here in Idaho and get people thinking in a different direction. However, if it was only that easy, although I guess recognition is of the problem is half the battle. And so for that, I thank everyone for bringing attention to this and bringing it to the forefront so that these industries can really start looking at it and figuring out how to help their employees, which will help a huge population in Idaho. So these industries all operate on paper thin margins, and they have huge turnover. And that's one of the biggest issues is a lot of their time and money is being spent on training and retraining. And so they don't have a lot of time, and they're operating these businesses, again, that are barely hanging on. And so they don't have a lot of time to look at other issues and ancillary issues and trying to figure out how to make things happen. It would be great if every single business out there offered a premium health insurance and entire retirement account and paid vacation and et cetera, but that's just not the reality, especially in these industries. They can't afford that. So they're forced to pick and choose, and they're going to choose what their employees most appreciate. And right now, that's not necessarily retirement. You're going to get a lot of employees that come in and I'm hearing from some of our businesses that even offer retirement. when they tell that to employees, sometimes employees will go, well, can I get time off instead? Or can I get a bump in my pay instead? And so we have to really look at changing the mindset too, out there. And really get people thinking about retirement and what a benefit it is, especially if you start saving early. The other issue that we have is that most of these businesses, because they are small, the owner is also the manager, and in the restaurant might also be the chef and is the janitor, and it does multiple jobs. And a lot of the times the accounting and all the HR capabilities are being done by the owner's spouse or one of the semi-retired parents, or anyone who goes, hey, I have a little bit of experience in that, I will help you out on that. And so that is not conducive to trying to figure out how to put together retirement accounts and payroll deductions and how to do all of that. And so that's another big hurdle that a lot of these small businesses face, just in doing basic HR things and picking which benefits they're going to have for their employees. They don't have the training and knowledge of HR directors in the larger companies. They know nothing about setting up retirement accounts, and trying to figure it out and thinking about it is very daunting. So it's easier to just put that aside and deal with what you do know how to deal with in running your business. And then now add COVID on top of it all. So everything else went out the window as people are just struggling to stay open and stay safe and all of that. But that also leads to a lot of real opportunity, because despite the perception out there that unemployment is really high, everyone in these industries, in the retail and hospitality industry, is hiring. And everyone is having trouble finding employees right now. So now they're turning back to, well, what more can I offer that's easy and accessible and doesn't break the bank, that will make me more attractive than the retailer across the street, or the restaurant down the street, or the hotel that's down the block. And so everyone's starting to relook at these issues right now to find out how to be attractive and competitive, again, without breaking the bank, and while they're still dealing with all of these COVID issues and trying to stay open and safe and everything. So it is something that needs to be easy. This is where it comes to where we need to give employers the tools and opportunity to educate not only themselves, but also their employees on the importance of saving for retirement and how to do that. And that is why I think these conversations are coming at a vital time right now. And I thank the City Boise Club, and I thank AARP, and there are others out there that have been working for the last year on what the state can do and what all we can do together to help educate everyone and to get everyone to start thinking about savings. And I think our industries are a great place to start, because we do have that younger population. Well, we actually have a population all across the board, but we have a great opportunity to start educating people about that. And so I thank you, and I will turn it back over.
Thanks, Pam. Certainly got a lot of questions in my mind for you, but I want to get to Angela first, and then we'll start getting into some questions. So, Angela, obviously you take a little more of a national view of it, and that, maybe it's not just an Idaho problem, but what's going on across the country, and introduce yourself.
Okay. Well, again, thanks to AARP, thanks to the City Club of Boise for giving me this opportunity to spend some time with you today, and I really appreciate it. I want to start out by letting folks know the Georgetown Center for Retirement Initiatives. We're based here in Washington, D.C., and the mission of the center is to improve retirement security, and a way to do that is to expand access, to improve investments, and to really focus on ultimately what our retirement system should be focused on, which is helping our workers save and invest over a career so that when they retire, they'll have sufficient income in retirement to live a dignified life in retirement. And for too many, as Lupe said, this isn't about playing golf. This isn't about traveling. This is really about living above the poverty level, because so many Americans, unfortunately, do rely very heavily on Social Security. But our retirement system is actually a multi-pillared system. Social Security was not meant to be the sole source of retirement income. And our work-based, employer-based system is supposed to be an important part of a three-legged stool: Social Security, retirement savings provided through an employer, as well as personal savings. But unfortunately today, that stool doesn't really stand on three legs. It's essentially on the ground, broken. And part of what we're focused on is trying to rebuild that stool and rebuild retirement security. By way of background, I've been in Washington, D.C. for way too many years. I've been in government service in Washington, in and out. I've served during the Bush administration 41. I've served during Bush administration 43 at the assistant secretary level. I've also worked for a large think tank, the Heritage Foundation in Washington, D.C. So I spent my life focused on a variety of policy issues. When I was at the Heritage Foundation, and this was 25 plus years ago, one of the big issues at the time for us then was advancing the notion of college 529 savings plans, which we felt very strongly could make a significant difference in helping more families plan to send their children to college. And fast forward 25 years and what we see and now know about college 529 plans. But let me be clear. You could take a lot of testimony from 25 years ago about college 529s and a lot of criticism. You could remove 529 and now insert retirement savings. So I would argue that a lot of the concerns that people have and the way these programs are being designed at the state level can have a significant impact to materially increase the well-being of future generations of retirees. I also want to say that we know a lot about the nature of the problem. Lupe went through that very, very well and very effectively. And I know that Idaho issued a recent report, a legislative report, and talked about perhaps the need to continue to study the issue. I would beg to differ, and I would say that again, that there's a lot that we already know, and there's a lot of what we've seen and are encouraged, and what we spend a lot of time here at the center focused on is, states have a history of being leaders and being innovators and coming up with innovative solutions to problems. And that's exactly what they're now doing with respect to retirement savings. And so there's a lot that we already know, and I'll touch upon that very quickly, and then I'll be happy to answer questions about what we see happening and these types of solutions. But again, Lupe covered it really well. What's the problem that we're trying to solve? The reality is nationally, we have more than 50 million American workers who go to work every day who don't have access to an employer-sponsored retirement savings plan. And they're significantly more likely to save if they do have that access to a retirement savings plan at work. Can they save on their own if they have, can they save on their own is an often asked question. Well, we have the private market, they can just go save. What we know is that those who don't have access to an employer-sponsored retirement savings plan, only 14% of them go open up an IRA on their own. The vast majority of people do not take action independently to set up their own retirement accounts. So again, they're significantly more likely to do that if it's offered by their employer. And again, even if they have one offered by their employer, when they do, more than about 70% tend to participate. But then when you introduce tools like automatic enrollment and other features, they're highly effective in changing saver behavior. And then when you use auto enrollment, you see the numbers jump from 70 to closer to 90 to 95% of workers who have a plan through their employer do save for retirement. So again, lacking that access is a significant barrier to savings, and introducing tools even when they have that access, such as auto enrollment, can make a huge difference. But what we need to understand is our population is aging rapidly. And over the next 9 years, 1 in 5 Americans are going to be over the age of 65. 25% of today's 65-year-olds are going to live to be older than 90. A baby born today is likely to live to be more than 100. So even if you're lucky and fortunate enough to have access to a way to save, and then save consistently for 40 years, say you start working at age 25 and retire at 65, 40 years, you will need to put away enough money in those 40 years of working to then support you with income to last you potentially another 30 years. And too many Americans fall far short of that. So they're not saving enough. And again, Lupe mentioned how low those numbers are. On average, maybe $2,000 to $14,000 in a retirement savings account, that they simply are not going to be able to generate that extra income in retirement that they're going to need to rely on when they stop working. And what's really disturbing is that when we look at the trends in our workforce today, we have a rapid increase. The fastest growing ages in terms of people in the workforce percentage wise are those over the age of 65. Saw a 63% increase in those over the age of 65 who are working. Now, some might be by choice, but others are not. And what's even more troubling was seeing a 93% increase in those over the age of 75 who are working. So again, just keep working. How long do you keep working if you need to support yourself in retirement? It's not really retirement if you keep working. And again, future generations of retirees are really who we are focused on. 2/3 of millennials. The millennials are those in the 30s now. They're approaching the age of 40. We just did a forum, retirement to 2030. We'll start to see Gen X retire. Millennials will be in their prime. Most of them don't have anything saved for retirement. They don't have access to a way to save for retirement. They're crushed. They're suffering with significant student loan debt. The recession. The millennial generation has been described as the delayed adulthood generation for a reason. Between the Great Recession and now the COVID pandemic, they've suffered a lot of setbacks and at the same time carrying large loads of student debt. Women also tend to be less well off than men in terms of preparing for retirement. They make up 47% of the workforce, but oftentimes they're in part-time jobs that don't deliver any benefits. And then for our oldest and those who are retired, we have elderly unmarried women. In terms of the population, half of them rely on Social Security for more than 90% of their income, and that compares to 22% of the population overall. The cost of doing nothing to address this today is significant, and it's going to continue to grow over time. There's a fiscal and economic drag from insufficient retirement savings. States have done this analysis. They've looked at the aging of their population over the next 50 years and the fact that so many of them will retire with insufficient retirement income. And it will cost billions of additional dollars to the state budgets. It will cost billions of dollars in lost economic activity and lost tax revenue to pay for services that the elderly are going to need. And again, people will say even a modest level of savings, $100 a month, $1,200 a year. If someone is able to put that money away consistently over a significant period of time, 2 or 3 decades, with the compound interest, the benefit of putting that money away over time, that can add up to $3,000 to $4,000 a year in additional income in retirement. That can make an enormous difference in taking someone above the poverty level and they need to rely heavily on government programs. So does saving a small amount make a big difference? It absolutely does. And because of this, states understand the significant fiscal and economic consequences of doing nothing. And that's why they've started to take action. And at the state level, we've seen a dozen states already enact programs to present a low-cost, simple, easy way for workers to be able to save for retirement. When I mentioned that people don't go on their own to open an IRA, oftentimes, many of these state programs are auto IRA programs that simply connect workers more simply to an IRA. And these programs are automatic. They use auto enrollment. They're voluntary. Workers always have the ability to stop saving and opt out of these programs if they can't. They're portable. And so workers can take them from job to job. They are at little or no cost to the state, to taxpayers. They're intended and built to be self-sufficient and self-financing over time. And again, they're very simple for employers to set up. And there's a lot of testimonial that's been done in states that have these programs where employers have said just how easy it is and very light touch for employers to set these programs up to simply facilitate and connect that worker to an IRA and allow them, the state takes over at that point. It makes it really easy for them to save in a retirement account. And these are really public-private partnerships where the state contracts with vendors, third parties, to provide these services. And these vendors, assume a lot of risks and the costs. in the startup of these programs to get them off the ground, and they are highly successful. To date, there's more than $126 million in assets under management if we're looking at just 3 states, and more than 173,000 funded accounts, and more than 23,500 employers who just a couple of years ago were not able to help their workers through these state facilitated having the access to an easy way to help their workers save for retirement. And again, 173,000 funded accounts, people who are now saving that 2 years ago may not have saved. And as they weathered and got through the COVID pandemic, an interesting question is going to be, you know, did having that retirement savings that they wouldn't have had just 2 years ago help reduce their levels of financial stress? They would have $500, $1,000 or more now in those accounts, and those accounts continue to grow over time. In terms of the program models, I'll be happy to answer questions. It's largely, many of the states have adopted an IRA, auto IRA approach. It basically is set up in a way that requires employers who do not already have an employer-sponsored plan set up to facilitate the ability of their employees to save for retirement. But again, as I said, employees can always opt out and choose not to save. Again, these are designed to be very simple and very low burden on employers and employees, and the state facilitates that, again, working with third-party vendors. There are also other ways to design the program. Again, they take advantage of auto enrollment. There can be the requirement for the employer to facilitate. In other situations, it could just be a simple voluntary payroll deduction that doesn't use auto enrollment. There's also a 401k option, which is, if people are familiar, multiple employer plan arrangements. Massachusetts have adopted MEPs. These 401k arrangements, again, if people understand IRAs versus 401ks, IRAs have lower contribution limits than 401ks do. 401ks do allow for contributions. However, the important distinction between an IRA and a 401k, if you are adopting a 401k in a state facilitated arrangement, you cannot require employers to participate in the program. So you do have higher contribution levels and the ability to match. But again, if you're really focused on coverage, experience is showing us where you have voluntary arrangements. And again, a marketplace is another type of state model that's been considered. It's been adopted in Washington and New Mexico. The marketplace is also voluntary, where the state sort of vets a series of IRAs and 401ks and offers them through a portal to workers. But again, it's voluntary. But the challenge is in a voluntary system that it's much higher to get those levels, to get the participation and to get the coverage that you would want to see if coverage and getting more of your workers connected to a savings vehicle for that to happen. So again, as Idaho looks ahead to the future and considers what its options are, there are a variety of different factors to take into consideration. But again, to be focused on the ultimate goals, if your goal is understanding that most workers, you have a significant number of private sector workers who have little or nothing saved, a significant number who don't have any access to a way to save through an employer-sponsored plan, and we know that that's much more likely a way to have them save, then coverage, do you want to achieve and expand the level of coverage? And then at the same time, along with that, you'll get the accumulation of assets and building savings over time. But again, if only a certain portion of your population is saving and not everybody is saving, again, I would sort of put the question out there as, is coverage and getting everybody to have that access to a way to save fundamentally the long-term goal? And with that will come the building of savings and assets. And over time, the earlier you get people to do that, the more they will be able to build that savings over time that will generate income in retirement. So again, I will stop there. I am happy to answer more detailed questions about the models that are being considered and adopted by the states and the economic and fiscal benefits of doing that.
Thank you, Angela. Thank you, all of our panelists. I'd just like to remind our radio listeners, you are listening to a City Club of Boise virtual conversation featuring Angela Antonelli, Pam Eaton, and Lupe Whistle. Okay, I got a bunch of questions that popped into my head. Some of them you've somewhat answered, but some are still out there. First, kind of came to my mind is, at least prior to the pandemic and COVID, we saw record unemployment, low levels of unemployment, lots of people working. Yet a lot of things I saw showed that income growth hadn't really been that significant. So a lot of people working, but not a lot of significant growth in income. And a lot of workers are facing, like you say, high student loan debt, at least in Idaho. And I think a lot of places we see real estate home prices going way high. So they've got an increasing amount of their monthly income wages going towards student debt, mortgage, things of that nature. I mean, inflation hasn't been real high outside of that, but still, what, I mean, especially as a young person, I'm thinking of these young people. We say, hey, start young, start saving even a little bit now. How can we get more people, interested or involved in these programs? You mentioned a lot of these are voluntary, when a lot of their dollars are going towards just paying the bills. How do you get them thinking about what's down the road than what's, due next week, I guess?
Yeah. Well, let me say that in sort of a bigger sense, it can be a very complex. It's a complex question with a complex right. Answer.
I understand there's not an easy answer.
Yeah, it's not. But let me say this. When I hear that question, my first reaction is people have an ability to judge what they can and can't do, and what they can and can't accomplish. And again, when they have the ability to be connected through their place of employment to a way to save, they get very excited about it. And as I mentioned, in a lot of these cases, they're not putting away. They're putting away on average about $50 a pay period, $25 to $50. Now there's a default contribution level, but again, workers have total control. They can change the amount that they're putting. They could put 2% away. They could put 1% away. They could put no percent away. But I guess at the end of the day, we see in the programs that have already launched the significant difference it's making. In my view, they've been very successful. I think in these states where if you go ask employers what the experience has been and you ask employees, their support of these programs has only grown over time. So yes, people face, and particularly, and these programs are often small businesses. They tend to be low and moderate income workers. As Pam said, you've got people working in, restaurants and salons, a lot of small businesses that for them, it's very challenging to be able to offer a plan on their own to their workers. So again, the state makes it really light touch, really easy, the use of auto enrollment. But again, when people see that they're auto enrolled, they save and they tend to stay in there. Some will opt out, but the vast majority of folks are staying in and they're making that contribution. And you know what? I trust them. They'll make an adjustment and they get excited when they see those balances start to grow. And they think about their future and planning for the future in a way that they didn't have a chance to before. So these tools really do work. And I think people can exercise good judgment. And the reality is there's always a trade-off between sort of the saving and paying down debt. Some people will say pay down the debt and don't save. I think that's a more complex argument and a more complex dynamic. And I think you do have to put a little bit away for emergencies. You should put away a little bit for retirement and figure out ways to manage your debt at the same time. If you focus solely on paying down debt, you may not pay down that debt. And at the end of the day, you're not saving anything either.
And Angela, I'm going to add to that, and that's that I guess I look at, there are a number of plans across the country, but I know that Oregon has been the one that has been up and running. They were the first ones, but I think that their average wages there for participants is like $29,000. And high participation. So again, it's, to me, when you have a payroll deduction, you're doing it at work, it's out of sight, out of mind. So once you start putting your either $25 or $50 a month, then as you make more, you can put more. But getting started, I think, is a key. Just being able to put something away to begin with, and as you're doing better, then you can increase that. But again, and this is about, getting people started at a very early age so that by the time that they do need it at retirement age, it adds up very quickly.
Great. Pam, did you have any comment on especially those, you work with all these workers that might be transitioning job, I mean, maybe they're not thinking they're gonna be long-term in that job. And so maybe that's part of the reason they're not putting away, even if there is an employer plan, right? It's like, maybe they're not gonna be there that long, so they're not putting away now. Is a big problem the fact there's not plans available for them, or more of a mindset of, I'm not putting away money right now?
Well, I think it's a combination of both, but quite frankly, I think the biggest issue is that there's not plans available or easily available or accessible. We're depending on those folks to go out and get their own plans. Like I said, in our industry, most employers don't offer plans, and there's numerous reasons why. I mean, first off, they just don't know where to turn or who to go to set up a plan. And then often when they finally figure out where to go to, they're presented with a couple plans that are complicated and expensive. They might be presented with a 401k. Well, these, especially small businesses, I mean, that's just out of the realm to set up 401ks. But there are other options out there. The other thing is they just don't have time, because I said they're operating, doing multiple things within their business. They don't have time to spend to do research and changing their payroll systems and figuring out, okay, can I do direct deposits and what all has to be done? So what we really need to find is we need a plug and play. So like, here, employer, here's a plug and play retirement account that you can easily set up for your employees. And then with that, I think more employers would be inclined to do it. The other thing is, especially in the industries I represent, is cash flow. Ebbs and flows throughout the year. And so there are certain times a year where cash is not readily available, and then other times in the year where they're, cash is coming in. Well, when you commit yourself as an employer to a plan where you have to reach a certain level every single month and make sure you're putting out a certain level every single month, it's scary. And that's a commitment that a lot of people don't want to make. And a lot of those retirement plans, because they are expensive or take a lot of money, say, you have to match a certain amount, or you have to give this certain amount, commit to this certain amount or something. That's just something that they're like, whoa, I can't, I'm not sure I can do that and make it happen all year long. And so, but that's not always the case. There's other plans out there. And again, is to teach the younger generation that they need to save, and $25 a month will make a difference. It's better than nothing type of deal. And so even if the employer isn't necessarily putting in money to those accounts, but that they offer them and educate their employees and say, hey, why don't you open an account? We'll open it for you. We will do the payroll deduction, because again, they were given an easy plug and play thing that they could do, and they tell their employees about it. So the only burden for them is maybe taking it out of the paycheck. I think that we would find there would be a lot more people would take advantage of it. And so, yeah.
Angela or anybody, with these plans we're talking about that some of the states are doing, are the limits, the contribution limits, the same as a traditional IRA right now?
Yes. Yep.
Same, just like an IRA.
The worker, it's their IRA account, and it follows all the rules of regular IRAs. That would be true if it was a 401k MEP arrangement. It follows the contribution limits and what's allowed under federal law and rules. Okay.
Is there any added incentive for employers to use this, or is it just the ease of use that's the incentive?
Well, again,
I mean, can they match to that or anything like that, or is it just purely the employee?
I mean, again, in states that we call, the auto IRA states, some folks may hear them called secure choice states. Work and Save is AARP. In those states, again, if an employer doesn't have a qualified plan already, then they're required to facilitate the ability of employees who want to save. And so that's kind of there. But at the same time, there's slight variations in models that have been adopted where there could be a little bit of a carrot, like the forgiveness in the state of Maryland of a business tax if you enroll your workers in the plan. So again, states are very innovative and can think of ways that, what might work a little bit better in their state with
Yeah.
regards to employer engagement in the program. But again, fundamentally, it's, there is that issue in my view of, do you want to get everybody covered? Do you want to have, all of the private sector workers in the state, or as many as possible, having access to an easy way to save? And the state facilitated plan helps to close that gap where employers don't offer the plans on their own. And so if coverage is really your goal, you need to think it's a design decision and a consideration for the state to consider. And again, it's really the IRA 401k difference when you ask about contribution levels. It's really, people will often ask that about the employer match. But again, there's restrictions in terms of what you can require employers to do. So then you wouldn't necessarily get to that coverage level, but sure, you do. Can you contribute more? Can an employer match it? Yes. You'll have some people saving, but you've still got a lot of people who don't have that access.
This is another difficult question, maybe. Lupe, you mentioned that, the average amount of people of Social Security is, what'd you say? I think about 18,000 a year for an average household. We've been hearing about Social Security problems, and reform has kind of been kicked down the road by Congress for many, many years now. A lot of people are saying don't count on even having Social Security, yet we're contributing to it all the time. What's your feelings about will Social Security even be something that's around, say 10, 15, 20 years down the road, or there's going to be major overhaul to that system? Or we know it's not enough, but it is one leg of the table, right?
It is, and that is a difficult question. Obviously,
that's what I'm here for.
Social Security is a very critical piece of that three-legged stool, as you mentioned. The future of Social Security, I think that it's, we need the leadership, at the federal level to look at this, So again, we'll see what happens, I'm sure that they'll need to take a look at it, but when it's a federal issue at this point.
Right. Anybody else have any comments on that? Basically, we need to make sure we're planning and saving outside of Social Security, it sounds like.
Well, and you know what? You are absolutely right, Jeremy. That when, yes, it'll be Social Security's here now, and it'll be here. What it looks like in the future, we don't know, right? But we can depend on Social Security. We can depend on it right now on its own, because it's not enough for people to be able to support themselves, to pay for their very basic needs. And that is why, start now or pay later, because, and again, as a nation, as a state, we need to start providing some way for people to be able to do for themselves now. Otherwise, it's the states that will be picking up the filling those gaps, so it's a cost to the states when nothing is done.
Right. So we've only got about 10 or 12 minutes left here, and still have some questions. I'd like to remind the listening audience, participants out there, if you have some questions, please send those so we can get to them. I know there was one question about who would administer these types of state plans, whether that's banks, or is that some of these large financial the Fidelities of the world and things like that. Who's managing these plans?
I can let Angela talk about what's happening in other states, because again, who manages here in the state would depend as to how a plan is set up here in Idaho. So Angela?
Yeah, so generally, again, I said these were public-private partnerships. In terms of oversight on the state end, a board is generally appointed. State treasurers are playing in many states a key leadership role in chairing these boards. Again, these state treasurers manage College 529 programs. They're managing the ABLE programs, which is another state level savings. States have a lot of experience managing savings programs. And so this is kind of modeled on sort of what we historically have already seen, and states have experience with that. And again, so as public-private partnerships, the board is set, the board is set up on the state end to sort of oversee this. It often consists of a number of people from the private sector who are on the boards appointed to that. And then they work as an entity to put in place contracts for record keepers, the program administrator, investment managers, and others. So there's a small suite of investment options that are made available and managed. And again, they use outside vendors to do that. State Street and BlackRock, Schwab, there are a lot of organizations that people are very familiar with in terms of the private sector market that are, again, just entering into these public-private partnerships with the states. And again, it's just easily connecting workers to those IRA accounts. And then, what are the investments tied to those retirement accounts? If people are saving and they're familiar and have those retirement accounts, you have options in terms of target date funds and, a bond fund, equity fund, so there's a basic small suite of investment options. Again, keeping it as simple as possible is important. But again, it looks very familiar to a lot of folks in its design to what you see offered in the private sector and how it's set up. And again, by design, the state is really facilitating it. It's meant to be self-sustaining over time with no cost to the taxpayers, and a very light touch for employers and employees.
Of course, state of Idaho has a 529 plan, the ideal plan, so it'd be something similar to that, only an IRA plan. So obviously we don't have that in place in Idaho now. So what can people do now? What can employees do if their employers don't offer a plan, or what could employers do now if they wanted to offer a plan? Are there some things that we can be doing now in light of the fact that we don't have that kind of a plan?
Well, and that's where.
Yeah. Go ahead, Lupe.
No, I was going to say that is where we need our policymakers to work with us in putting something together to offer the employers so that they can offer that availability to their employees. Again, what we see, the service we've done, employers would participate and would offer if it was easy to use. But I mean, when you've got the small business employers that they're worried about just keeping their doors open to keeping their businesses going, and then to go and do all the research and what do we do? God, yes, I did the payroll deduction, but what am I going to do with it? And all of this work. I mean, that takes a lot of time away from what the employers are focusing on, which is their business. So again, the simpler it is for the employer, the simpler it is for the employee, the higher participation. And but again, it's something that we will need to get the legislature to work on setting out a plan that can work for these employers that we're talking about.
It seems like a lot of these programs are targeted towards maybe even younger workers and getting them started. What do you do now if you're, 10 years away from retirement age? What's the best advice you give for somebody who maybe hasn't been saving, and what's the best advice you give to somebody like that?
Start, save, and save as much as you can.
Start now.
Yep. Start now.
It is never, ever too late. Obviously, it works out better for everyone if you start, at the beginning of your career, or not even at the beginning of your career, just when you start working, right. Because, I mean, we've got young folks that are just getting started, and they're feeling their way around their profession, but no, the sooner they start, the better they look. But I mean, if you haven't done anything and you're 10 years, even 5 years away from retirement, I mean, save, because anything that you put away is more than you have at retirement. So
great.
And I would say, getting the message out that it doesn't matter how much, even a little is better than nothing, because I think there's a mindset out there of people thinking, if I can't put in several $100s or $1,000 a month, it's pointless. So I will wait and start saving when I can put a larger amount in. And we need to get that out to everyone that no, if you start saving now, even if it's just a little, it's going to be helpful down the road. So even if you only have 10 years though, throw in $100 because that's better than nothing. So teaching everyone that and getting that education out there and that message out there would be extremely helpful.
Yes.
Right. Are employers doing enough? I mean, I know that, you know, Pam, you're dealing with a lot of maybe smaller employers and things like that. But, you know, there was a time when you went to work for a company and worked for them for 30, 35 years, they provided you with a pension. And, you know, obviously, you know, people didn't live as long then either. They had their pension and Social Security, but they didn't live that long in retirement. Are employers doing enough, or there's more that employers could be doing now?
I'm hesitant to answer because I represent so many of them,
Right.
but
What could they do, I guess, you know, more?
I mean, yes, I think there is more that employers can be doing. I think that for so long, the focus has been on you need to offer health insurance, you need to offer health insurance, you need to offer health insurance, that would always be the choice or where everyone was putting their money, and that was very spendy. There's now so many other options out there and assistance out there for that. I think that it is important that employers start looking at other things like retirement and what they can do and how they can help all their employees. There are lots of our employers that they might offer retirement to their management, but then that's the only level. And I think that there's other ways to set it up, and part of that is because of some of the roadblocks where it all has to be the same for everyone and all of that. And so that's why they only offer it to management. But I think there are some other ways out there that they could offer it to a broader range of their employees, and just educating their employees about it and helping their employees set up, because like it was stated several times, if it's automatically deducted from your paycheck, employees are more apt to do it. And so that might not require the employer to do a match. It might just require the employer to educate the employee and get them to go, oh yeah, I guess I could get some taken from my paycheck. And that would start them early and make sure that money is getting put in. So that there is more, there's a lot more that employers can do. But I think, again, they need assistance because they are so focused on just keeping their doors open, and retirement is complicated. Or it can be complicated, or it's perceived as being complicated. And so we really do need to find the simple programs and a simple way to educate people, and start helping employers to educate and implement the simple programs that are out there.
Jeremy, if I could, I would add to a plan. I'd actually flip it a little bit, because you're asking what more can employers do? And I would turn it to the private sector, because we wouldn't be having this conversation if the financial industry was getting the job done, and it's not. So we have this huge gap, and it's not been filled. And the reality is the private sector, financial industry, has not felt like it's worth their time to invest in helping low and moderate income workers save for retirement.
Right.
They've not made it low cost, easy, and accessible to a lot of small businesses. So what states have accomplished in part through its leadership and launching these initiatives around the country is they've kind of poked the financial industry and said, you need to step up your game. The financial industry has realized it has to step up its game, and it has to do a better job. It has to be more innovative. It has to take better use of technology. And the reality is these states that have now put in place these programs that said, look, if you're an employer who doesn't already offer a plan, look, the state is giving you this state facilitated option that will allow you to help your workers save for retirement. Okay, guess what? What that is also saying, it's important to understand, is if an employer in that state decides, okay, I don't want to use the state facilitated plan, I'm going to go into the private market and do it on my own, they can do that. The state's fine with that. They've said that. The intent is not to compete with the private sector. The policymakers' goal, as it should be, is let's get our workers covered in the state. Let's make sure that they all have a way to save for retirement. If the private sector is able to deliver on that, that would be fantastic. And what we're seeing in these states now is instead of it being a threat, they're seeing it as the opportunity that it has turned out to be. And they are out there and they are developing products and using technology to lower their costs and to offer simpler ways for employers to save. And if that works, that's great, because at the end of the day, if more employers are able to go into the private market and there are solutions that work for them, that they're easy, low cost, and accessible, that's a great outcome as well. And the state understands that. The goal is to get everybody covered. It's a huge problem, 50 million workers across the country. So there's plenty of room for solutions, and there's room for the private sector to step up and fill some of that gap, but the states can't wait. And the states are taking action and getting workers covered now. And these plans can be a step to a future 401k and start a lifetime of good savings habits. And that's a great place to start.
Well, thank you. We've reached our hour. I can tell that the three of you and myself included could talk more and more and more about this, but I want to thank you. We've been listening to a City Club of Boise virtual conversation featuring Angela Antonelli, Pam Eaton, and Lupe Whistle, a discussion on the retirement planning, and appreciate your time, and please join me in thanking them, and look forward to seeing you down the road. Thank you.
Thank you so much.
Thank you.
Thank you,
Time.
Jeremy.
Bye-bye.
Goodbye.
Thank you.
Goodbye.